What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. Really helps the channel grow. And thanks to all those who continue to tune in. Welcome to all those who are new to the channel. Our nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from, scalps and intraday trades all the way up to long-term swings or leap trades as well. So if you want a deeper dive into, how exactly we set up our charts with the broadening formations, levels of support, resistance, things of that nature, make sure you tune into the bonus content that we've got on the YouTube page. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the STRAT, which is the base of our charting and trading method, there's a quick reference PDF, a link to a quick reference PDF guide in the description of this video. It's free. Go ahead and check that out if you haven't already. It gives you everything you need to know for the basics as far as reading price from a strat perspective. Only three things a candle can be, a 1, 2, or 3. Just breaks down price action very simply, but very detailed at the same time. So go ahead and check that out if you haven't already. But yeah, let's go ahead and get into today's video. Let's go ahead and start with the agenda. We'll go ahead and first recap the price action from today, Wednesday, March 25th, before we zoom out like we always do. Take a look at the week, month, quarter, and year, and then we'll zoom back in to set what we call our 4-hour markers and then the triggers and targets for Thursday, March 26th. We'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's go ahead and get into the charts. Starting off with the 5-minute time frame like we normally do. This is so that we can use our proven and repeatable strategy to take advantage of early morning scalps or get early entries into longer day trades. All right, and so that method is looking for higher lows at or above the opening print, which is the first traded price of the day. If you get higher lows at or above the opening print, we look to get into calls targeting overnight high and previous high day. If we get lower highs at or below opening print, then we want to look to get into puts targeting previous low a day and overnight low. All right, so here we see the opening print was this price level 1 here, 56.64, and that was a slight gap up from the previous high a day of 56.09. So you can see we quickly closed that gap and began to rebound. Now we never went too down here. We just continued to push up. Did finally pull back right at the opening print level. So the opening print level could have been a trigger. However, it is we're coming from a higher high, right? So we're not getting a lower high at or below opening print. So puts are off the table at this point, right? And then we got the pullback. And essentially, or not essentially, we did get a higher low here. Now it is lower than the previous low of the day, but it still ended up being a higher low. So we went ahead and, there we go. We went ahead and entered contracts here when we cleared the 2 down, right? Not the 1. But when we cleared the 2 up to lock this in as a solid higher low, we went ahead and entered calls right here. We took them to the gap close. We did sell about 25% of those at the gap close just in case. And you can see it almost warranted itself, right? We got the 2 big wicks here. Came down, made a higher low, but then ultimately made a lower high and then broke below this higher low. And that's where we sold our position there. Reason why we sold the rest of our position is we're back at the top of the range, right? So we're running into all types of resistance. The gap's been closed, so it's no longer really acting as a magnet, right? Prices interacted in that range, and so the gap has been closed. We're running into the last week's high, which is this horizontal purple line here. We've got this is a weekly broadening formation. It is slightly going up to the right. I forgot we're above last week's high, which is this horizontal purple line. But this purple line just going slightly diagonal up to the right, that is the weekly broadening formation. This orange line right here in the middle of the gap, that is a daily broadening formation. We've got this gray line coming up here that is a 4-hour broadening formation, and we've got overnight high up here as well, right? So those are all acting as resistance. And again, if we kind of zoom out a bit, actually I should have just done that from a, let's see, oh, here's today. Let me just do this from a, let's go 4-hour and just check out from the week, right? If we look at the 4-hour, we can see that we're right up here, which is the top of this little mini range that we've been in for the good part of 3 weeks now, right? So we've been going in between 50 and 58 essentially for 3 weeks, and we got back up to that 58 level. So, you know, got to kind of watch. I'd rather take my profits, and then if we're going to continue to go up, you know, maybe we missed the breakout, but there should be some retest. Maybe it's not today, maybe it's not tomorrow, but there should be a retest of this upper level here. If there's not a retest, then, you know, we just continue to play our triggers and targets to the upside, like we did today, right? So not much to glean from the early part, right? Now, you could have turned around and, oops, let's get the right chart out here. You could have turned around and bought puts to, you know, get some price action to the downside. I'm working on getting a new computer here in a second. This one's starting to run real slow. But anyway, so, yep. So you could have taken this lower high on the 5-minute for puts back down to opening print. Again, it's not part of the proven and repeatable strategy. That does add more risk, right? When you're above the opening print level, just inherently you're just bullish on the day at that particular time, right? So if the bulls are winning, no real sense of getting the put on just such a short time frame, right? Now, if this was a 4-hour lower high right here, like if this was 2 days ago and then this was today, we made a lower high, you know, that's more reason to start looking to see, all right, maybe we're going back down to the bottom of this 3-week range. But we're sitting here on the 5-minute, so no need to be, you know, too crazy here. We can always wait just for another higher low on like the 15-minute or the 1 hour or something like that to enter back into calls. And that's really what we did here, right? So we came down, we bounced off of opening print, we came up, but we made a lower high, right? And this is after a lower low, right? Here's that higher low, we came down, made a lower low, lower high. So there is the possibility of starting the downtrend, right? So we made the lower high, lower low, came back, but we ultimately made a higher low, right? And we had some chop here in between what was the opening print level here, this price level 1, and this yellow line, which is a daily broadening formation, right? So what we did, we went ahead and took a look at the 15-minute, right? And you should have multiple time frames up at once. We're just, so people on phone and whatnot can see a little bit better, we're just doing one big chart. But you can see around this time, we got this higher low on the 15-minute. So now we did get the higher low. We went ahead and entered as soon as this candle went 2 up to lock this in as a higher low. But we did get an immediate pullback. So we did get a lower high. But, you know, and again, this was a little bit more risk on the table because of how far the price could have pulled back before actually making a lower low, right? It would have been a little bit better if we would have waited for this higher low here and took the 2 up here. But, you know, we didn't want to miss out on, you know, what could have been some good momentum in the morning. So we took that higher low, right? It did make a lower high, but it ultimately made a higher low. So it was just price consolidation. And then ultimately it turned back around, made the slightly higher high, higher low, higher high. And, you know, once we got back up into this level where the gap was previously, where the daily broadening formation is, where, you know, what else we have? The weekly broadening formation, you know, the month flip, overnight high. Back when we're getting back to all that resistance area, you know, we jump back down into the 5-minute and we start looking at things from that perspective. Now, we never made a lower high, you know, went higher high after a higher low. So we're looking at uptrend, but then we had this break to the downside. Now we made a lower low, right? But ultimately the stop was down here because of our entry, right? So we stayed in it. We came back up, we got the lower high, and, you know, at that point we're looking at, okay, if we got the lower high, if we go lower low, we're obviously breaking back down below opening print. The day turns red. We're going lower high, lower low, starting a downtrend, and the day's almost over. No need to stay in those. But we got the higher low, push back up. But once we started wicking again, in this candle right here, we started, let's probably take this off the board. We're net 0 day basically, right? We closed just slightly above where we opened. And so in that last 5 minute, when we were getting all that, this wick was being produced, we went ahead and exited the position for actually a slight loss, right? Because we entered, I believe it was a slight loss. Yeah, we entered here at 57.30. And we closed, just slightly above 57. So there was a slight loss on that. Take it away from what we made this morning, overall a net gain on the day, but it was a pretty flat day, so there wasn't a whole lot to be made there, right? So one thing we can say, if we flip to this 4 hour, let's zoom out a little bit, get a little better chart for us here. Right from the 1 hour, we were looking at lower low, lower high. Actually, this was a higher high. Where was the 1 hour downtrend we had? Yeah, that was to finish out the day yesterday, right? So we had this higher low, but then lower high, and it was looking like a downtrend could be started here, right? But we obviously broke above that overnight, stayed above that. So from the bullish perspective, that is definitely positive. Now, if we look here, we're back again at the top of last week's high, running into this daily broadening formation, the weak flip, which will act as resistance until we can make some type of higher low above it. And then this 4 hour broadening coming through here. And we got the market makers expected move high, not too far above that. So, how much further do we go the rest of the week? We'll see. And is the top of the range going to be respected? And are we going to go back and look for at least the 50% of that range to see if we bounce there? Or are we going to explore all the way back to the bottom of the range, right? That's going to be the question. Now on the 4 hour, we're still in an uptrend. It's not the biggest uptrend, right? But we have high, higher low, higher high, higher low. We've made a higher high. So we're still in that uptrend, but we are running right along this broadening formation. Now it is a broadening formation that was formed within the greater 4 hour broadening formation. So if we are able to break through all of these levels of resistance, then it could be a bit higher that we go before we run into this 4 hour broadening formation, which lines up kind of around last month's 50% level where this weekly broadening formation is, right? If we were to reach that tomorrow, that could be a good turning point back to the downside. Otherwise, as time goes on, that 4 hour broadening formation keeps going up, and it looks more and more like we would go explore the top of the larger range that we've been in since the beginning of January, really, right? So here's that larger range, right? We're at the bottom of the range here. Looks like we've done like another little look below and fail, look below and fail, look below and fail, triple bottom type of thing, and getting ready to push back, at least retest the 50% level of that range and see if we can push on through, right? So 4 hour, we are working an uptrend. On the day chart, we are making this broadening formation. Let's get a little better chart here. There we go. We are making this broadening formation, right? So we have gone, actually we just did kick off a slight, oh my goodness, a slight uptrend, right? Sorry, I don't know what's going on with my charts. There we go. We did kick off a slight uptrend. Let me make this a little bigger here. Right, so we went high, higher low, higher high. So we're starting an uptrend, right? Because previously we were coming from higher high to lower low, which is making a broadening formation, right? But now we've kind of started an uptrend. We are running into this daily broadening formation here and here as well. So again, that resistance is right there. But if we are able to break through, we could be, going at least to go test that 50% level of the previous, the larger range that we've been in, right? So slight uptrend started on the day, but really still just sitting at the top of this range we've been in, just wicked above. So, could tomorrow turn into a 2 down, and today was just a look above and fail, and then we go back and explore the bottom of the range over the next week or so. That is a very good possibility, but we are closer to that edge. Like we talked about, if you're not a range trader and you're a trend trader, you want to wait for price to get to that edge, and then you want to see a breakout and retest, giving us that higher low, and then you can start to trade on that trend. But until then, it's still range traders at this point in time. But we got to use that patience again, like we've been talking about for 3 weeks now, and see what happens tomorrow. On the week, again, we where we at? We wicked 2 up again, and actually reached magnitude this time. There we go. So we went 2 1 2 up, right? So that triggered at the high of the 1, and then we reached magnitude, right? 2 1 2 up, magnitude, high of the candle to the left of the 1. So we reached that, just wicked right above it. That does technically kick off this combo 2 down, 2 up. That should take us back up to the high of this 2 down, right? So back up to the $63 level. If we are going to continue this momentum, but again, we've got those levels of resistance. We're at that 61.8 fib extension of the April bull flag that we had, right? So there's the flagpole, there's the flag. We're at that 61.8. Is it going to act as resistance along with, that weekly broadening formation we had going through there? The month flip there as well. Last month's 50% level isn't too far above here as well. So are those going to all act as resistance, or are we going to continue through and continue with this combo 2 down, 2 up? We'll see here. Patience is the key. On the month, there we go. Things are looking a little bit better for you bulls, right? We started the month early in the month going 2 up, 2 down, but it did reach magnitude. In fact, it reached magnitude and went past magnitude, which then kicked off this one combo 2 up, 2 down, which would bring us back down to this $28 level should it reach strat completion. But for now, we've pushed back. The bulls have been able to push price back up, almost back green on the month, but still got a little bit of work to do there. Not too much longer in the month. This is the last month of the quarter as well. We'll get to that in a second. But looking more and more like we could possibly go 2 down, 2 up next month, getting us back up here to these $72 levels. But until we at least flip the month green, we still got to keep that one combo 2 up, 2 down on the board. And even if we do flip green, that one combo 2 up, 2 down will still be on the board depending on how April opens up, right? So we just got to keep that in mind. $28 pullback. Pullback to the $28 level is still a possibility on the table out there, right? But looking to continue to close the month strong and try and kick off that 2 down, 2 up on the month like we did earlier this year and take that up to strat completion, right? And the reason why that's important on the quarter time frame is because we've got this big wick on the quarter, right? We don't want so much an inverted hammer as, we can better accept a more of a wick on the candle. More of a body on the candle if there's a wick on top. But when we're in that, what we call in the strat world a shooter or an inverted hammer, that would be a little bit more discouraging and look more like a possibility of going 2 up, 2 down next quarter, which, again, would have that $28 target out there. So again, you want to just continue to push up. If you're a bull, things are still neutral at worst on the high time frame, right? We've been talking about that for a long time. Nothing is broken down on the high time frames, right? It hasn't even broke down on the week chart, right? Yeah, we made a lower low 2 weeks ago, but that was coming after a higher high. So again, we're just in a broadening formation on the week, which would just indicate sideways action. The month, we're still looking to see what that sets up. The quarter, right? We ran this one combo 2 down, combo 2 up strat already. It reached completion, so there's nothing else there. And then on the year time frame, we've run the strat as well. We had this 2 down and then went 2 up this year, making a 2 down, 2 up reversal with the magnitude up here at that 70.08 level. And again, we reached strat completion there. So nothing breaking down on the year. We made a higher high after a lower low, so that is, trying to start an uptrend, right? We're not coming from another higher high, so it's reversing trend back to up. And at some point, we are going to have to put in a higher low, but everybody likes to see price go up forever. So again, nothing breaking down from that year chart, quarter chart, month chart, even week chart. All right, just keep playing the daily volatility until we get out of this range and into some type of trend again, right? So that's what we've got from a zoomed in and a zoomed out look. Let's go ahead and go back to the 5-minute and look at how we'll attack tomorrow's price or tomorrow's trading. Here we go. So to do so, we want to make sure we have our 4-hour markers on the board, and those are previous high a day, overnight high, overnight low, and previous low a day. Now, the last of the 4-hour markers is the opening print, but obviously we can't put that on the board until tomorrow morning. So just for illustration purposes, we'll say we've had a little bit of a pullback here in after hours. Let's say we get more of a pullback, right? And we come back down. Say we just poke just below last week's high, right? That's our overnight low. Well, when trading starts tomorrow, let's say it opens somewhere in the middle of the range, right by that 161.8 fib extension of that April 7 bull flag right here. Let's say it opens right there. If we open and we push up, maybe reject off an overnight high and pull back, but then get some type of higher low at or above opening print, we want to look to get into calls, targeting overnight high and previous high a day, right? At the same time, if we open and we push down, maybe we bounce off of last week's high and we come back up and then get some type of lower high at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. All right. So that's what we've got from, that's how we want to attack the early morning, first 5, 10, 15, 30 minutes up to an hour of the day. Want to look for that. But then after that hour, we want to kind of start to pull back, make sure we're looking at those higher time frames and just looking for those higher lows or lower highs or whatever to continue a trend on, like, the 15-minute or the 1 hour or the 4 hour, and not worrying so much about opening print, right? You always want to keep opening print in mind, how, at the same time, right? You don't want to always be buying too many calls when you're below opening print, regardless of the time of day, unless you're making some type of higher high or something like that in a trend up, or some type of lower high in a trend down, right? If you're in a trend, but if you're ranging, you just got to kind of be on your toes a little bit more. All right. Let's go out to the 1 hour, because again, we have this uptrend on the 1 hour. Now, we didn't make a lower high here, right? Because we never went 2 down. We just went 2 up, inside, 2 up, 2 up, and then we went 2 down. But even then, this 2 down hasn't gone below the low of this initial 2 up that made the higher high, right? So we're just flagging here, in my opinion, or just moving sideways, and just right up against resistance again, right at the top of the range. So we've just got to be ready for either way. If we continue to push down, if we push down below that, the low of the first of that 2 up there that gave us the higher high, right? At that point, we're pushing back into Monday's price action, right? So, or no, I'm sorry, that would be Tuesday's price action. And again, we had some chop around this range just above the week flip. So if we do fall back down, it looks like we could be doing a look above and fail on this range we've been in for 3 weeks, and it might be time to start targeting the bottom of that range. You can see we've got this hourly broadening formation here, which would indicate, if we're going to go back down to the bottom of this hourly broadening formation, that brings us back down to the bottom of the range, right? So high probability that could happen if we get more price action to the downside overnight. Again, it's a very news sensitive market as well, so who knows what kind of catalyst we would have in terms of news headlines and things of that nature. So just right now, we're just playing the volatility intraday, and just using the triggers and targets, right? If we look at the 4 hour, let's get a better chart here for you. There we go. Take a look at that 4 hour, right? Here's that 3 week range we've been in. We're sitting at the top of it. If we do go 2 down, right? If we go 2-1, 2 down, magnitude of that move is previous low a day, 55, 59. But if we go below that, that does trigger this combo 2 up, 2 down. And the magnitude is not the low of the 1, but the low of the candle to the left of the 1. So at the very least, that would take us back down to retest the middle of the range that we've been in for the last 3 weeks. Or actually, that'd be more towards the bottom of the range, but it's the middle of last week's price action, right? So, I'm sorry, we're on the 4 hour charts of this. So, yeah, so it would take us back to the bottom of this range that we've been in here for these 3 weeks, right? Down below 50.76 is that look below and fail area, right? Look below, fail back in there, look below, fail back in, look below, fail back in, look below, fail back in. So is this a look above and fail to take us back down here? We'll see. All right, so from the 4 hour, there is the possibility of a combo 2 up, 2 down on the 4 hour time frame if we go into the downside. In that first 4 hour candle tomorrow, if we go to the upside, we got this 2-1, 2 up. Not a lot of magnitude there, but it would continue on the momentum that we had. pricing back towards market makers expected move high. If you're not familiar with that level, make sure you check out our weekend video where we go into that more detail. But again, remember, market makers expected move is right about 70% of the time, so it's more than reasonable to expect that if we get to that level with some type of momentum, we could go right past it and start testing last month's 50% level in this weekly broadening formation, right? So keep an eye out for that. Again, we don't get into predictions on this channel. What we do is we give you very specific triggers and targets for both sides of the equation. So it's up to you. Once it triggers, it's on you to get in and make sure that you monitor that trade and take it to its magnitude, right? And if it reaches magnitude and goes further, right, then you can obviously manage that as well. But there's nothing wrong with taking profit at the target, right? So very clear entries, very clear exits. That's what we provide. So again, on the day chart, if we go 2 up on the day, same type of thing, right? It's just continuation. We've got to get through that market makers expected move high, retest last month's 50% level, see if we can't get above that as well. If we go to the downside, again, we're looking at testing the bottom of the range again, right? Getting this 2 up, 2 down. Entry on the 2 up, 2 down is the previous low day, 55.59, and the magnitude is the low of the day before that, which is all the way down here at 51.54. So we're just playing this little range right here. I wish I could tell you more, but that's what we've got. But at least we've got some very, very clear triggers and targets, right? Let's go ahead and go to the notes. We've been looking at the charts for quite a while now, right? So looking at this is for Thursday, March 26th. There will be 194 trading days left in 2026, and we know the close price on Wednesday, March 25th was 57.04. We know that the week is green, right? If the week were to flip back red, it would have to get below 54.21. But the month is red still, right? The month, we have to get above that 58.15 level, which we did briefly, but we're closed below it. So at close, the week is still red. And then at the same time, the quarter and the year are green. So with that conflict of time frames, no continuity there. That's why we're seeing this chop, right? Once we get all the time frames back to green or all the time frames back to red, that's when you see more of a trending market, right? It's when you have this conflict is a lot of times when you get those choppy markets or up and down markets. Like we talked about before, the market makers expected move is plus or minus $7.99 from the close price on Friday, which gives us an expected range of 59.13 to 43.15. And I forgot to take this gap off there because we closed that this morning. So there's no gaps above. We only have gaps below, leading all the way back to, back when we had that April 7th low around that $7-8 area, right? We talked about from a early morning scalping perspective or early entry into a longer day trade. We want to look for higher lows at or above opening print to get into calls and lower highs at or below opening print to get into puts. We talked about on the 4-hour time frame, if we go to the downside, that kicks off a 2-1-2 down at 56.49, magnitude being 55.59. But when we reach 55.59, if we go below that, that does kick off this 1-2 up combo 2 down, which has a magnitude all the way down there at 51.53. Because that is a decent sized move for the day, we do have a couple of intermediate targets that price can either bounce at or move sideways for the rest of the day at. So keep a lookout for those levels. If we go to the upside, we have that 2-1-2 up triggering at 58 flat, magnitude only being 25 cents from 58.25. So we've got the extended targets out here listed for you as well. On the day, if we go 2 up, 2 down, then that triggers at 55.59. So very, very clear entry, and the magnitude of that move is 51.54. So very clear exit. Just depending on how things go tomorrow, we have these intermediate targets in between. This pretty decent, $4 move that you would have to reach magnitude, again, in case price bounces or just starts to move sideways. Those are the levels you would look for that to happen at. If we get past the magnitude of 51.54, we've got some extended targets listed out here for you as well. If we go to the upside, that's a 2 up continuation. So very clear entry, but unfortunately not the clearest of exits because it is just a continuation pattern and not a reversal. But either way, we would take that trigger at 58.25, and we have these targets listed out here for you. On the week, we are back above the trigger 56.48, right? Where we closed at 57.04. Trigger for the 2-1-2 up on the week was 56.48, so we're back above it, which is why the 2-1-2 up is in bold. But we did reach the 57.78 level, so I can actually strike through. right? So we did reach magnitude for the 2-1-2 up, but we went past it, which then kicked off this 2 down combo 2 up, which does have magnitude all the way up there at 62.82, right? It is quite a ways to go for the rest of the week. I mean, $5, SOXL can run $5 in half a day, right? That's not the problem. But right now we're just getting more choppy action than anything else. So not sure we would make it all the way up there by the end of the week, but that is the magnitude for the move. If we're not able to make it up there, then look at 59.13 and 60.85 as possible points of reversal, or just price, going sideways at that point. Right, we talked about, we did trigger the 2 up, 2 down on the month, and it did run the strat, so that is complete. And that did then kick off the 1 combo 2 up, 2 down, which does have a magnitude all the way down there at 28.12. But at this point in time, we've been able to, what we call hammer up, or push price back up, get a good wick on the bottom, and doesn't look like it'll be continuing at this particular time, but we do need to keep that in mind, because this will continue on through next quarter if we don't go 2 up on the quarter next quarter, right? It just next quarter it'd be a 1 combo 2 up, combo 2 down, right, at that point, because we've been combining 2 down candles. So just keep that in mind. That is still very much on the table, and that magnitude is all the way down there at 28.12. If we are going to go 3 on the month, was I just talking about the quarter? Month. If we go 3 on the month, we've got to get all the way up to 72.36, right? We know on the quarter we already ran the strat. Same with the year, we already ran the strat. So nothing really to look for there. We just got to see what happens on the month and the week, right? And that all of that comes from trying to read that day. If we can get out of that range we've been in for the last 3 weeks, now we can start looking more to the upside. But watch out for that look above and fail, all right? But anyways, that's what we've got for today's video. Those are your triggers and targets for everything from a scalping perspective all the way up to the 1-year chart. We try to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did enjoy today's video, a thumbs up goes a long way. We do really appreciate it. Especially those who continue to give us a thumbs up. We can't thank you enough. Again, it just helps the channel grow, helps the channel spread. We're not a paid channel or anything like that. We're just trying to spread information that can help, retail traders be a little bit better, right? The cards are stacked against us enough as it is. So if we can make things a little bit easier on ourselves, bring some consistency to the game, then you'd be surprised at what that can do for you. So again, a thumbs up goes a long way. A share goes even longer, right? If you think this would help somebody and you share the link to this video, that's even better. So we thank you again, and we'll go ahead and close the video here like we normally do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you had some good rest last night. Woke up refreshed this morning, and look forward to getting out there and trading with you.